Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Chicago soybeans. There continues to be two patterns on this daily chart, one broken, repaired, and possibly still broken, though it is somewhat unclear, and one other that has been tested, pierced, but not really breached or broken, not yet. The two patterns are, first, the recent main showrunner for this market is August last year, the dark blue December 24 to August 25 bullish Andrews pitchfork. In late May, prices dipped down below the dark blue lower tie, currently 1184, and stayed close under it until the end of June, when prices shot back up again, as a result from forming a small double bottom pattern, Eve and Adam type. However, after the market peaked from that rise, we last week tested and punched down through the dark blue lower tie before halting at the combination of the second pattern and the slowly rising long moving average, which is currently 1147 3/4. This long moving average was also instrumental along with the 61.8% absolute Fibonacci line at 1105 3/4 in holding up the market through June and the rise we saw in early July. This week prices have still not fully let go of this dark blue lower tie, which is why I'm still calling it a breach and not a break below the dark blue lower tie. This leads me to the second pattern, and one that was being tested last week and this week has been pierced, but not what I would say fully breached. It is the early January to late June bright red bullish Andrews pitchfork. Last week and this has been the first real test of any of the tines of this pattern. Prices last week tested but rejected the bright red lower time, which is currently 1160 1/4. And this week the market pierced the bright red lower time but immediately reverted back upwards, having been stopped by the companion to this lower time, the flatlining gold long moving average, currently 1147 3/4. Today we seem to be using that bright red lower time as a base along with the green short medium moving average, currently 1163 1/2, though we are a bit indecisive right now. Overhead we have the flatlining mauve medium moving average as resistance, currently 1176 even, which looks interesting right now. However, there are two patterns developing over this week and last week that we should note. The first one is we have a small 2-week-old double bottom pattern in formation right now. The July 24 high at 1170 even would be a good neckline for this very small pattern. Secondly, and more importantly, we are set up to make a weekly key reversal here this week. Thus, if we close tomorrow night either over 1170 3/4 or under 1159 even, then we'll be on. Anything in between will have a lesser outside week pattern. Right now we're looking just about at a outside week. I also note how that shows the 1170 area is becoming quite important. Looking either side of the immediate market, top side we have all the congestion seen back in March and early April between about 1170 even, there it is again, and about the March 23 low higher up at 1193 1/4. Whilst below we have congestion from June between 1110 to 1140, with that 61.8% absolute Fibonacci line below that at 1105 3/4, which I believe caused that congestion in the first place. Plus, just under that is the 50% Fibonacci line of the May to August 2024 move at 1098 even. Given June's actions, this looks like a significant support zone. Chicago soybean meal. Much as soybeans themselves, there are two main patterns here, one breached and one new, that shows signs of promise. However, this is where the similarity ends. You see, yes, we do have an early January to mid-June bright red bullish Andrews pitchfork that barely had the bright red lower tie tested at the start, currently at 310.10. But after testing the overhead bright red middle tie 3 weeks ago, prices turned and dropped back down through all the moving averages and down, testing the bright red lower time and breaching it this week. The seeming saving grace from a further fall, and it would be a Pyrrhic victory if that is, because the bright green lower time below held up the market, and that's currently at 302.60. In this process, over the last 3 days, the market may have formed a small bullish morning star pattern, usually seen as a bullish pattern, and the results of which I am keen to see either today or over the next few days. This brings me to the second pattern here, the bright green mid-May to late July bearish Andrews pitchfork. The market has already met the bright green middle time below, and it looks like a good pattern right now, in which case I would keep an eye on the bright green upper time above, currently at 326.5. as this crosses down through the bright red lower time on or about the 10th of September. And this crossover, though they are unrelated times, it still may cause volatility then. Now, the roadblocks. The roadblocks that stand in the way of either direction are, for the upside, the moving averages above in a close formation between about 312.5 to 316.70. The neckline currently at 320.60 of the failed mid-May to mid-July pretty ugly looking reverse head and shoulders pattern. And then the 50% Fibonacci line, the May 24 to July 25 move at 326.20, before we reach the bright green upper time. Meanwhile, below we have, under the bright green middle time, the 50% Fibonacci line of the 2025 to 2026 move at 302.10, which I'm sure aided the bright green middle time as a support, plus the congestion over June between about 300 to 306. And then the old congestion for April to August 2020 between 300 down to 282. My final point, with which this commentary would not be complete, and that is something I've included in my commentaries now for 167 weeks, so for way into 3 years. It is to do with the annual key reversal seen here at the end of 2023. I said back then, and I quote, "I only need to remind you once again of my words when I pointed out that Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down." This duly came about at the end of 2023. I've been living in the shadow of this pattern ever since. End of quote. I have also added ever since, and I quote, "If there's only one thing you take away from any of my musings, let it have been those words." End of quote. For 3 years, the shadow of that pattern has darkened the skyline of this market ever since. I wondered if prices were now finally sending that shadow to oblivion. Right now, well, it doesn't look so please don't hold your breath, as we are still, with all these moves, still significantly below the close of 2023. Chicago soybean oil. There is one pattern here that has defined moves higher this year, even when it was being thoroughly tested. It is the bright pink March to August 2025 bullish Andrews pitchfork. The market today running just under the bright pink middle time, which is currently at 70.04. Whilst all this was happening, a more recent pattern emerged, a dark blue start of February to late June bullish shift pitchfork. 3 weeks ago, prices pressed down through the dark blue lower time, currently at 70 even, and lodged more or less ever since in amongst some congestion between July 2008 high at 67.14 up to the July 23 high at 69.12. Prices have tested down to the July 2008 high at 67.14 and up to that bright pink overhead middle time. Interestingly, if the market drops down through the July 2008 high, then we really haven't got that much support until the congestion seen back in July to August 2023, between 62.5 and 65 even. This is the reason why we had a low last month at 65.59 and one in April at 65.35. As prices turned away from testing this congestion below. To all this, I introduced last week a start of June and to mid-July bright green bearish Andrews pitchfork. Prices are in between the bright green middle time below, currently at 64.68, and the bright green upper time above, currently at 71.63. This is the first bearish pattern I've introduced here in a long time, and it's one to watch, as it may require finessing to a shallower bearish shift pitchfork for the same move, which I would be happy to do in a heartbeat. This brings me to a point that I've been making now for the past few months, when I said, and I quote, "I think for this market the question is not whether the market is bullish or not, but how bullish does this market choose to be?" End of quote. This is now the 12th week, and the bullish incentive for the first time is not only dampened, as I have been saying in very recent weeks, but possibly may have an existential threat developing from the bright green bearish Andrews pitchfork. So caution. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.